If you're anything like me, when it comes to investing, you love the dividend yields and the ETFs that provide it. Personally, I'm not a financial advisor, but I do invest in a lot of ETFs. Pay attention to the market and some of the trends that we're seeing. Today's video, we're going to be talking about one of my absolute favorite dividend equity ETFs, which is the SCHD. If you're unfamiliar with it, guys, it is from Charles Schwab and it is a dividend equity SCHD. Now, we're going to go through all of the benefits of picking this up. But again, I'm not a financial advisor, guys. Do your own research because right now this ETF is about 10% off discounted, which means over the past year, it is down 9.49%. That is right, it is almost down 10% in the year, which means you can be getting into this ETF at a very, very great discount. Number one, guys, the opportunity within the SCHD is seen as a very attractive choice for dividend investors, particularly amid the market downturn, which is right now. The high yield stocks or the dividend stocks are what people have been looking at and looking at a normal income and the compounding income that we do get from these stocks. Now, it also focuses on long-term wealth, which is good. Good combination of dividends, good combination of long-term wealth. Considered a compelling investment for dividend investors with a long-term focus on wealth goals. So it is not just really the growth factor, but it is more of the wealth goals. Current market consolidation is viewed as providing a very attractive entry point for picking up this ETF. Now, in addition, guys, it is the diversity that it has, and it is very well managed from Charles Schwab, is praised for being a diverse and well-managed fund. It is currently trading the one-year low, which again is a massive opportunity. This is the time that I'm taking the opportunity to actually pick up and stock up on this ETF. Now, it also does have a very strong historical performance. Even looking back at the 5 years, it is up about 38% on the 5-year, which is a really good increase, especially for a dividend. Most of the time, the growth of the dividend stocks or the ETFs do not vary that much, but overall, we are seeing a pretty good performance as well as the dividend yield that it is giving you, boasting double-digit post-inflation annual returns, which is huge since its inception of 2011, and it has outperformed major stock indicators, including the S&P 500. That is right, guys. It has outperformed the S&P 500 ever since its inception in 2011. Now, within this, it does hold a lot of different stocks, so it focuses on the quality large cap stocks with a market cap of over $70 billion. So we are talking about some of the largest companies within the United States. This strategy, along with diversification across various industries, really positions it as a reliable investment, especially because it has the diversification across a bunch of different sectors. Now, of course, it focuses on industry-leading companies, including Amir, Pfizer, Verizon, Coca-Cola, Chevron are some of the top holdings, which do yield a very solid return when it comes to dividends in general. And again, you're not buying individual stocks with the ETFs, which is the reason I love it, guys. You're not putting everything into, a Verizon or putting everything in a Coca-Cola. You're really diversifying among 100 stocks that are in this portfolio to make up the SCHD. Now, this is one that they really consider a buy it and forget it investment, that this is something that you can hold forever based on the growth factor, based on not only the dividend growth, but also the growth of the ETF fund itself. It presents a buy it and forget it investment opportunity for long-term investors, offering a 3.7% yield. That is right, guys. You are getting almost a 4% yield on this. The recent price drop has increased the yield, making it more appealing to more income-oriented investors. Again, this is not a growth ETF. This is a dividend ETF. And this is held actually along with a couple other ETFs that I do have in my portfolio. Now, it also focuses on the oversold and the recovery potential. EFT is definitely oversold, which again, according to the relative strength indicators, the RI or RSI value of 27.7, it suggests there is a long-term recovery potential, and also long-term investors, it is really that people have oversold this, but now is the time to get in, guys. Yield increases during the correction. As the prices decrease, the yield has increased. We've seen this before. This is kind of what happens, providing a third reason and really a big reason to get into the dividends, considering buying during the correction, which is right now. The yield is currently at its highest since May, and we've also seen the dividend growth year over year with these ETFs, which is great. Now, the final point, guys, risk consideration. You always has to take into account. It is a very well-run, diversified fund, but there is a risk and there is no guarantee that it is going to continue to outperform that S&P 500 fund in the future. Investors are encouraged to really consider the potential downside and also looking at the longevity or the long term that you're looking to build or get into this fund. Now, since this has been out since 2011, that is right, guys, we're going on about 13 years here. It has provided 177.76 since the inception that it has actually grown. So not only has the dividend yield that it has been giving back to the shareholders went up an incredibly amount, as again, some of the holdings do change, but it has yielded 177% return. Now, dividends, even the payout that we just seen most recently was 65 cents. So it's varied from 65, 66 cents this year. That is per share. So if you look at the stock price that it is right now, it is trading at 69.44 as of recording this video. So $69.44 as of recording this, giving an annual dividend of $2.62 per share. So now when you think about that, when you're putting, $5, $10, $15, $20,000 into something like this, and you're getting an annual dividend of $2.62 with a dividend growth on this, guys, of 5.70. That is right, a pretty solid dividend growth overall. There's a lot of alternatives, but I still stick to the SCHD. And again, this is one that I do have in my M1 portfolio, which I have some links down below, guys. If you want to check out M1, it is well worth it. It is a great place to do some investing. Well, guys, that'll do it for today's video. Let me know in the comments what you guys think about SCHD, holding it as part of a dividend portfolio, and also what you guys think is going to be the next up and coming big dividend stock that we're going to see. So again, guys, that'll do it for this video. Let me know what you guys think. And as always, thank you guys for watching.